Welcome back to Upside Down Data. We need to talk about Bitcoin. So, Bitcoin has extended its gains. It has broken to new year to date highs and continues to rise, tapping as high as 52K today as I record this on the 14th of February. Very impressive. And really, I think what we've seen is that the market was digesting the ETF news. We had really this entire rally, or a big chunk of this rally we saw here, was all leading into the spot Bitcoin ETF releasing. And that was the big trade leading up to that point. Then there's a lot of indecision about what would happen next. Would there be a massive sell the news event, or would we just continue ripping, or something like we saw where we had a little bit of both? So we did have a decent sized correction. I think it's important to note that from the top of that wick to the bottom of this one, it was over 20% correction. So that is, in a sense, a sell the news type of event. There was a nice dip, some nice buying opportunities, even sub 40K. But then we've now rallied nicely out of that. And it does seem like the ETF has been impactful. We're continuing to see record inflows into the ETF, especially like on a weekly basis here. It's being talked about on this Blockworks article. And so that's good to see. It suggests that the ETF has not been just a massive disappointment. A lot of people thought that was going to be the case. A lot of people were saying that anyone who already wanted to buy Bitcoin had already bought Bitcoin. So the launch of an ETF wouldn't matter. It would just be kind of this dead weight that maybe eventually would matter, but really wouldn't see much action in the short term. It actually seems like that's not been the case. It seems like a lot of people have been loading up on the ETF, which in some ways makes sense. There are a lot of people who probably may have wanted to have exposure to Bitcoin, but wanted to do it through their brokerage account, and they didn't have a way of doing that before. That could be institutions, that could be individuals. And so it seems like there's been a decent amount of demand there. So that's obviously not going to be the only thing that's driving price up, but I think that the narrative that that tells has probably helped suggest that there is this outside demand that wants to get into Bitcoin through a vehicle like the ETF, and that then maybe makes people comfortable to continue hitting the buy button and send things higher. What I really want to talk about in this video, though, is what some of our models are seeing about Bitcoin. So that's all kind of narrative stuff. It's hard to kind of quantify the impact that some of that stuff will have. But I think our models give a good idea of where things are and where they're going. So let's talk about it. So this is our trend confidence indicator, or TCI, for Bitcoin. So I've talked about this model before. The general idea is that in a given rally, you want to observe where is price going and where is the TCI going in relation to price. If you're in an uptrend and the TCI is trending up, that's a good sign. That means that's a rally to be believed. But if price is going up and the TCI is trending down, that's a concerning sign. It means that momentum might be leaving the space and that a correction might be coming. And we've seen this play out over and over again in this rally ever since the beginning of 2023 and also before. These kind of patterns play out where you want to look for confluence with the TCI and price, and that would suggest the trend is likely to continue. If you see a divergence, that means that a reversal might be coming in the not too distant future. And the same type of thing happened here. So we had gotten up, and then as we kind of ground up here, the TCI was losing steam, suggesting that momentum was fading basically from the Bitcoin market. And we kind of then chopped sideways through here into the ETF launch, then had a correction to kind of finish off this range. But then note that as we came out of this downtrend here, out of this local low here, still within this kind of range we were stuck in through here, you'll notice that the TCI broke out to the upside. We broke out of this downtrend right around back here, back when Bitcoin was in the low 40Ks, and then off to the races we went. And this is something that I was talking about for a lot leading into that moment. As we got up into here, I was getting cautious short term on Bitcoin, saying, all right, there was some data that were suggesting we might be a bit overheated there. We were seeing the TCI continuing to trend down. Not a good sign, probably in for some kind of correction. We got that. But then I was saying that we'd want to see is a reversal in the TCI. That once we see that reversal, that would be the sign that maybe now this weakness is breaking and a new sign of strength, a new show of strength is in the cards for Bitcoin. And that's exactly what we've seen. As we broke out of that downtrend, off to the races we went. So this has been a very useful tool of navigating the ups and downs within this broader uptrend we've been in ever since really the beginning of 2023. So that's one thing that we can look at. And basically the other thing I should mention with the TCI is it's continuing to trend up. So that's a good sign, suggesting that personally, I'm not going to be doubting this trend yet because we're seeing confluence between price and the TCI. So the next model I want to talk about is our short-term risk model, our short-term upside downside potential indicator. So if you're not familiar, higher values mean higher risk, lower values mean lower risk. And it's reactive to moves that play out over days to weeks, so shorter in its time horizon. And it too had reset massively going into this local low down here. And I talked about this again, I talked about it on X and over here on YouTube, that we're getting to those levels that acted as the springboard for previous rallies within this rally we've seen, again, ever since 2023. And so it suggested is that this was a reasonable place to think of short-term value for Bitcoin. This is probably a short-term value zone. And exactly that's what we've seen. We now ripped to the upside. Now, the good news is that we haven't gotten up yet to the highs that we put into some of these legs up we've had in the rally so far. So I do think that Bitcoin still has more room to work with. And depending how strong of an impulse this is, it also wouldn't be impossible by any means for us to actually break above some of these levels. So I'd first be watching these levels here as being the first sign of possible resistance. So we might start seeing some weakness show up around those levels. But it also wouldn't be completely impossible for us to break to even higher levels, getting above 1, for example, or maybe even higher. So we'll have to wait and see, but that's what I'm looking at right now. So personally, I'd be surprised if this particular leg up is the one that just immediately takes us to new all-time highs. Could happen. We'll have to see. But I do think that it's one that could get us up into the mid 50Ks, maybe even touching 60K. I do think there would probably be some resistance around the prior all-time high. If we were to get that high, I think it'd be highly unlikely that we just rip straight up past it without any kind of reaction from the market at that point. That tends to not happen with Bitcoin. If we just look back over in previous times, for example, in 2020, in the beginning of this big parabolic move, we did get stuck. If I just zoom back over here a little bit, we did get stuck for a bit. You'll notice right around 20K, which is the prior all-time high from 2017. Something like that, again, would not surprise me if it were to happen here. Usually you see some kind of price reaction at the prior all-time high. So that's the short-term UDPI. I also want to talk about the long-term UDPI, which has cooled off significantly, and it still sits quite low. And that's where I think that short-term, on this current leg up, I don't think we could break through all-time highs. But what would not surprise me is if we have a leg up, consolidate somewhere around it, and then could have another leg to break out above that. And the reason why I think that's plausible is look where we're starting from on a long-term risk perspective. Down here about negative 1.22, quite low, relatively low. And that's what you want to see in a rally, especially a rally to take you to new all-time highs, is starting out at a relatively low level. And that gives you that headroom to then start moving and then ultimately break out into those newer highs. And so that's where I think that if Bitcoin wants to, it could maybe hit new all-time highs a little bit earlier than some people might think. Now, it's not my base case. I still think Bitcoin's going to have to put in a lot of work to get there. But from just a risk perspective where we start right now, it's not impossible. And I think it's a lot more plausible starting from here than, for example, of us just plowing through from here to new all-time highs. A lot of people back over here in December were just saying, all right, all-time highs are in sight. Within a month or two, we're going to be there. I was saying, I don't think so. It's unlikely, in my view, that we're going to launch from such high risk levels when we, especially at this point when we saw some difficulty and just clear off to all-time highs. But now that we're down here, we're in a bit of a different scenario. So it's not my base case, but it is something that I think is a hypothesis to keep in mind, that at least from a risk perspective, it would not be by any means impossible for us to do something like that. So obviously important to keep our expectations in check and follow the data and not get ahead of ourselves. But the data right now are more conducive to that than they have been. And especially seeing risk levels this low, being this close to the prior all-time high, is a bullish sign in my opinion. And the final thing I want to talk about here is some data that is longer term on Bitcoin. So this is actually a model that I haven't really talked about much on the channel. We've talked about it a little bit when we were first launching our Polarity Digital Pro subscription service. By the way, if you want to check out live data from these models and more, you can go to our website, polaritydigital.io. But it's one that I wanted to talk about more here, because I think actually a lot of people probably don't even know this exists because I haven't talked about it in a long time. This is a longer term model for Bitcoin that we've had on the site now for a long time. And this is our market cycle model. And what it does is it's basically trying to quantify the macro cycles that Bitcoin goes through. The bull market into the bear, the bull market into the bear, bull market, bear, bull market, bear. Basically quantifying when are we in a bull market, when are we in a bear market, very definitively. And so the way it works is it has this critical level similar to our market direction classifier, if you're familiar with that, this critical level. If price is below that level, then that's bearish, and that would be a bear market. If it gets above that, that's bullish, that's a bull market. You can see it does a very good job of capturing these dynamics. And it did the exact same thing back through here. Back when Bitcoin was down at around 17K is when we got this flip back here in early 2023. And it's been a bull market ever since. It absolutely nailed that, which was expected. It's done a fantastic job of quantifying bull and bear markets in the past. And so when I saw that, that was another reason why back here in early 2023, I got very bullish and I got vocally bullish, saying I think we're in a new bull market. We were seeing the data lined up. And it wasn't just this model, it was our forecast model that was going that way. Also, our long-term UDPI had been very low through this period, suggesting this was a deep value zone for Bitcoin. And indeed, that's what we've actually ended up seeing. And so everything lined up. And the reason I wanted to bring this up is that with all these short-term considerations that we often get kind of focused on because it's the most exciting, because it's the thing that's happening in the moment, whether we're going to go clearing off to new all-time highs or not, in a lot of ways, that does not matter. What really matters is being in for the bull market and getting out for the bear market. Just look at how well that has performed. If you're just in towards the beginning of the bull market and get out right around the top, that's all you got to do. A lot of this short-term volatility, you're not really going to miss it. You're not going to worry too much about playing it perfectly if you can catch this whole entire move. You're going to stress yourself out a lot more basically trying to catch all this than just playing the big moves that go through here. And I've been talking about this a lot on the channel and over on X. Short-term is noise if you're right about the overall market direction. If we're really in a bull market, all you got to do is just be in the market and you're going to do just fine. So obviously not financial advice, you just make of these data as you will. But I'm still seeing every indication that we are in a bull market. All the data point in that direction. And so until they look different, I'm not going to flip my outlook. And so that means is that we're in the fun part right now. And that's one of those things where if you've been following the channel for a while, if you were with us through the depths of the bear market, we're talking about how this was likely a deep value zone for Bitcoin. Historically speaking, we just don't get to those UDPI levels very often. And so if you loaded up your bags down here, as we've been talking about at that time, then right now it's just fun. You're not having to worry about much. You're just kind of letting things ride. And that's really the key with these markets. You make all the money in bear markets, and it's at the points where it feels the worst. You know, buying Bitcoin down here felt horrible. We were going down only. Everyone was calling for lower prices. Some people were calling for 6K Bitcoin, 3K Bitcoin down over here. But if you just follow the data, just ignore the noise, ignore the emotion, ignore all the influencers who are just going with whatever the dominant narrative is, and just follow the data, this has worked out extremely well. And that's why I continue to be data driven, because it has worked out very well for me so far. I don't see any reason to stop that now. So to wrap us up then, I think in the short term, this current rally, this current leg, could have more legs to it. We have more room to work with in the short term, and certainly in the longer term from a risk perspective. But then also, we just zoom out. Worrying too much of that is probably not the most important thing. Right now, it looks like we're in that bull market. And so personally, I'm just enjoying that moment, not getting too concerned about those short-term fluctuations. Everyone's going to be arguing over on X about what's going on. They're going to be arguing about the short-term moves. But I think oftentimes the people who do best are the ones who just ignore a lot of that and just kind of follow the data. So that's what I'm personally going to do. So again, not financial advice, make of the data as you will, but those are the things that I'm looking at in the market right now. I think it's a very exciting time. I don't think it'll just be up only. There's probably going to be more times that scare people, more corrections, more drawdowns. But as long as the long-term data is bullish, then in some ways, none of that really matters. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates of our models and more over there. And go to our website, polaritydigital.io, link in the description.